You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for us to commence episode 2 of the bi-weekly options extravaganza, known far and wide throughout the cosmos as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, at least we tend to think so, Options Insider Radio Network. Reminding you, if you like what you hear, make sure you rate it and review it wherever you get the content. Could be on any platform, could be on the mobile app, wherever you get this stuff. Keep rating, reviewing. It does help all the new folks, and they are legion. Discover the content these days, so thanks for that. Thanks for continuing to drive up my bandwidth bills. It's a fun problem to have. And then, of course, if you want to go above and beyond, you want to do extra living, because who doesn't want to do extra living out there these days in these markets? You want to get great pro Q&As. We had Mr. Tony Saliba coming in to answer your questions in the hot seat this week. We also have, of course, Options Oddities coming up tomorrow to break down the mad week that was and indeed still is. Course, live access to whatever we do here on the network. You get access to all of it whenever your schedule allows. You can hop in there. And of course, great pro giveaways like the Pro Trading Crate and a whole bunch more, which I have to remind people again, you cannot buy those. People keep asking, can we buy the Pro Trading Crate? You cannot buy those. They're exclusively for the pro members, unless, of course, you're the Rock Lobster. And you complain all the time that you don't get a cool Pro Trading Crate, in which case maybe we'll see if we can send him some goodies as well. Speaking of the Umbrage Master, let's go see who's joining us on the show. First, we have the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, who apparently wants to toss his hat in the ring for the epic battle for the vintage 80s Sergeant Slaughter. When did this come about, sir?
I thought Sergeant Slaughter would make a fine companion chainsawing. So, I could say he could direct, sort of manage the job site, as it were. And I could send pictures back to you about Sergeant Slaughter in action, and for the enjoyment of the listeners, for just a little bit of a comic relief in this market of madness.
I will say, you want to clean up that clam pirate problem in like 5 minutes, Sergeant Slaughter is your guy. I'm just putting it out there. He'll get those guys out of there in a heartbeat. They're not going to mess with the Sarge. Who's going to mess with the Sarge?
Yes, I like. Maybe if I put him out there on the rock in some sort of manly style pose, he will frighten the clam pirates away.
All of his poses are manly. He does not have a non-manly pose. It is impossible to put him in a not exactly hyper masculine pose. But that is Mr. Sergeant Slaughter. So we'll see. Maybe we'll have to get the Rock Lobster in there. I don't know. Is the Meatball willing to share his points with you? You have to debate this with him. He has been carving up some points of late in that contest And the other competitor in that contest, who also wants a sweet, sweet Sarge for his own purposes, is the uncleist of Mike's, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show. What do you think of the prospect of the Rock Lobster trying to vie for the coveted Sergeant Slaughter?
So here's what I dislike about the whole thing. In the Manager of the Year contest in 1988, Bobby Heenan got screwed over because of the fact that he clearly had more votes than anybody. But then at the last second, Hillbilly Jim decided to give Captain Lou Albano his votes. Hillbilly Jim wasn't even a full-time manager. And then Hillbilly Jim said he's going to give Lou Albano his votes for Lou Albano to win Manager of the Year award. That was wrong then, and combining points is wrong now.
Wow. Okay, well said. I will say this, Mr. Uncle Mike, that I don't think you have much to worry about because the Rock Lobster knows about 3 80s wrestlers. He knows Macho, he knows Hogan, and probably Andre. That's probably about it. So if it's not those 3, I don't think he's getting points for the meatball. I think he's losing points. But we shall see.
I'm coming in with a steep handicap here.
Yes. If you somehow managed to claim the Sergeant Slaughter prize at the end of the year, I would be quite amazed. And let's see what else is amazing us as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading, what is lighting up our tape out there in the markets today, listeners. And again, it's kind of a bit of a weird one out there. All the different indices are kind of doing their own thing. Earlier in the session, we had the NASDAQ off over 1%, the Dow up over 1%, and the S&P kind of, and we're still kind of hanging out mostly at that degree, listeners. NASDAQ has come in a little bit. It's only off about almost 0.85%. The Dow still up about 1.3%, and the S&P borderline unched up about 0.1% out there. So it is a very strange day out there. We haven't seen these types of days in a while where all the indices kind of doing their own thing. For a while there, everything's been kind of moving in lockstep. It's been the old saw, right? Whenever it hits the fan, correlation goes to 1. Today, not so much, as we are seeing maybe the disparate impact of earnings season hitting different indices in different ways. All that means coming into the start of the show, we are actually seeing a vol coming in a little bit, which is nice. I could have used these levels, I don't know, a couple of weeks ago out there. VIX is at about a little bit north of 27 when we kicked off the show, about 27.05, down a little over 3 points, about 3.3 points. VVIX at about an 81, down 6 points from where it was this time last week. VXX 1835, down almost 2 points, about 1.9 points. UVXY 1040, down about 1.7 points. SVIX, our inverse friend, up exactly a point to 1165. UVIX at 10.5 when we kicked off the show, down a little over 2, about 2.3 points. And VolQ is at 32.25 when we kicked off the show. That's down exactly 2 points from where it was on Monday's show. So vol coming in a little bit. Let's go around the horn. Let's start because he took umbrage at the point shearing out there. Let's have Uncle Mike have pride of place, sir. Uncle Mike, what's lighting up your tape? And I guess it depends where you look, Uncle Mike day or not.
Yeah, commingling of points is like commingling of funds in the stock world. You can't do that. It's just wrong on many.
Remember, when he gets it wrong, that counts against the meatball as well. I'm just saying.
Yeah, but he won't answer.
He'll have to. He's required now if he's going to compete.
Yeah, but you don't lose points for getting it wrong, though. You just don't get the point. You have to get it right. You have to earn the point. No, this is very wrong. This is the Hillbilly Jim, Bobby Heenan, 1988 fiasco all over again. All
right, Mr. Rock Lobster. The competitors have spoken. They say nay to you vying for the Sergeant Slaughter. So it's not up to me. My hands are tied.
This ain't a handicap match. This is if he wants to come in as a 3-way duel of death, to where all 3 of us are competing on separate playing fields, then I'm fine with that. I welcome that. However, a handicap match like what they used to do with Andre the Giant, he'd take on 2 smaller guys. We're not doing that. No, it's unfair.
You want an old school triple threat match?
I respect that, but anyway. So in looking at these markets today, it's kind of weird right now, no doubt about that. We have the Dow up over 1%. We have the S&P relatively flat. I think the market's just waiting on what's going to happen with Apple after today. We have the Apple earnings announcements. I believe it's after the market today, but Mark, not many, our newer listeners might not know this, but Mark Longo is kind of deceptive about when Apple earnings are at times. So I'm going to leave that to him, and you guys can take him at his word or not. But with that being said, I think that is what the market's looking at right now with where we're looking to go. We have a rally in the bonds. We've had a rally in the bonds all week this week. So things are looking good for bond bulls. We're relatively flat today in the commodity land of silver, so to speak. And so we're not getting a ton of movement in the precious metals anyway. And gold's relatively flat as well. Oil is knocking on the door of 90 again. So we have that. We have a 5% move in natural gas. That's not that big of a deal anymore, it seems, but we do have that movement. So really what I think it boils down to today when we're looking at everything, I think we're going to start getting a little bit of movement on the S&P once we actually see where Apple's going to go today. And so I'm an S&P guy. To me, it's the S&P 500, and then there's everything else. So I guess these other indexes like the Dow and the NASDAQ do exist, but in my world, the S&P controls 80% of all U.S. business and commerce. That's kind of the big dog, and that's kind of what I tend to follow when I'm looking at things and when I'm analyzing things. The only other thing that I just would like to point out before I turn it over to the Rock Lobster, which he'll have a little bit more insight on than I will, is that I'm looking at my screen and it's saying VIX 26.98. I thought there was a law in 2022 that you had to have a VIX at 30 or above. What's going on with all that? And that's my take on what's happening today.
Yes, Mr. Rock Lobster, he makes a good point. I gave you a hard time about your VIX strangle. I said it's going to go to die, especially the downside. And it seems like, at least for now, you may have some life on that downside of that strangle, sir.
Could happen, although I sold some puts this morning, so I'm a little bitter about it. But I'll probably buy them back tomorrow. But I do have some other ones working, but I did sell a chunk of what I owned this morning. Remember we were trying to buy those puts in June? No chance. I think I even got Sebastian to buy some June puts.
I bought some of those bad boys. Yeah, I forgot. What were we on? Like something ridiculous. It was the 15 strike, right?
Yeah. The 15s are 5.8. My 10-cent bid is now being pennied for 10,000 contracts, and my 50-cent bid on the 20s is now 63 bids. So everybody must have caught the whiff.
Everybody heard the show. And that guy got mad that I pennied him on his 100,000 lot. He didn't appreciate that, so he's coming in for more.
Right. So I kind of pegged the, like our latest bout of over 30 vol is when, the CPI came in hotter than everybody expected, and the Fed was not going to change course and all this kind of stuff. And everybody realized, inflation's going to be with us for a while until it's not, right? So when that VIX, this is the link, because volatility tends to, like when you're looking at a VIX number, it tends to do what it has done before, meaning like, the market makers, all they're doing is pricing options, right? And then they price those options, and then the SIBO has their calculation and you get VIX. So there has to be a lot of, let's just call it reflexive memory, I guess. I don't know, there's probably a better term. The listeners could know what it is, where, the market understands, to me, VIX always means a range. And right now, the range when everybody was super worried about inflation was a little higher than the range when we're a little less worried about it now. And I think it's mostly because you've had some central bank action this week. And that central bank action has been, I would not say it's more hawkish. The Canadians came in 25 basis points lighter than expected. The ECB was, because their rates are ridiculously low, they came in what was expected. And then the Fed speaks November 2nd. So if you're looking at VIX, we are right basically at kind of at the high point of the candle, right when everybody's worried about inflation again. We sort of, the whole ugly process got ugly for the last 6 weeks. And that's where VIX is literally right now. So when TOSAW says, it's below 30, yeah, this is where some air is coming out of the volatility balloon from the beginning of the week, and the market once again is, in my view anyway, they're front running the fact that the Fed is going to slow down their pace of rises. Doesn't mean they're not going to rise anymore, but they're not going to be as aggressive, maybe because they don't need to be. We do have mortgages are higher, like costs, these things to tamp some sort of spending down. We're getting zero out of the federal government, though, right? We're not going to say like, in honor of inflation, we're going to freeze spending. Haven't heard that. We've heard depleting the strategic petroleum reserve. That's kind of, I don't think that's inflation. I guess that tamps down the price of gas for a minute. I'm sure that it will stop on November 4th or 5th after the election. So we got that going for us. When is our election? Is November? I think it's what, the 6th? No, it's the 8th. It's the 8th. So the SPR, I'm sure they'll stop doing that on the 9th. So from that point of view, I think just the range of volatility has been around the inflation expectation because it kind of took everything over. Just look at today. You had Facebook earnings down pretty hard, mostly because they're just spending a lot of money on R&D. We're waiting for Intel, Apple, and Amazon, which is a pretty good chunk of the queue. That's tonight. Like Google came out and their sales are still growing, just not as fast, right? So the multiple comes down. So like, I think a lot of it is you have big multiple compression on like those stocks that were leading that got insanely bid during COVID, when everybody's like, oh, everybody's going to do everything online and give up their whole life. All of that growth is slowed. And I don't know at what level it stops growing, but clearly Facebook, their revenue is down a bunch, or their profits are down a bunch from that period of time. Twitter was the same. Google is the same. So I'm just looking at the numbers, and they're lower. I figure Amazon is making less money. Doesn't mean they're not a huge profitable company, but so anyway, you have like those big leaders are pulling back, and now the rest of the market is catching up. Commodity stocks, boring stocks like 3M, a lot of stocks that have been kind of slapped to the curb are kind of replacing them. Now, you need all of those stocks to rally when Apple is falling or Google is falling. And I think that's the situation. So we have, one is where VIX is stuck. If you notice, volatility in short-term options in SPY hasn't gone down today. It's gone up a little bit. The bid is kind of there to cover the Fed announcement next week on the 2nd. So you got kind of like a mini earnings cycle going where that really short-term vol will stay bid, but that back month vol could drift a little lower until the actual news is out. And I think that's from a volatility point what we see. So if the Fed does slow down a little, say, hey, maybe we don't have to be aggressive into the end of the next year, beginning of next year. I would say like stocks would probably rally because the GDP number wasn't terrible, right? I guess things aren't as from a GDP point of view, again, seeing what the numbers are, if there's a revision or something after the election, but they're not terrible relative to the first 2 quarters when all these prices were just taken off. It seems like the pace of price growth has at least leveled off. So it feels like there's a little less. Inflation's still here and things still go up, but it has slowed down somewhat. That's all I can say. And as far as volatility goes, I mean, the S&P 500 is clearly looking right at what the Fed is doing. Are they going to slow the pace down? If so, folks will be happy about stocks again. Or if they keep their foot on the gas pedal, the bond market starts to have those, let's just call it discombobulated coughs and sneezes. Then we could easily be right back to 3,500 SPX again. So again, we're sitting here waiting. I think short-term vol will stay high. But we could see VIX here vacillate at least until the second. And then after that, we'll maybe hopefully have a little clearer picture of what's going on at the end of the year. Is it, potential for a Santa Claus rally to 4,000 or, back to sort of the Palookaville and uncertainty of more aggressive rate rises into the end of the year.
Indubitably. Let's head on out, see what's lighting it up out there in these kind of weird mixed markets today, listeners. VIX is doing some paper, but if there's a theme to all these numbers we're looking at today, at least from the major index side, it is lower. All the ADVs have come in dramatically since our last show, which is kind of interesting. Let's start with VIX. VIX at 339,000 contracts. That's respectable, certainly. The ADV is down to 541,000. That's down 130,000 contracts since our last show. So VIX not keeping the numbers up. SPY, same deal. 3.6 million contracts on the tape for SPY. The ADV is down to 8.04. That's still a lot, but it's also down 1 million contracts a day from where it was just on Monday's show. The S, 1.63 million. Again, that's an impressive amount, but the ADV is down to about 2.6 million. That's down about 400,000 contracts a day. Small caps, IWM, 560,000 contracts on the tape right now. Their ADV down to 911,000. That's down 80,000. And the Qs, 1.44 million contracts on the tape. Their ADV is about 2.6 million. That's down about 300,000 as well. So all these ADVs have come in from these very impressive levels we saw not too long ago out there. But looks like it's very much a micro-focused day, listeners. Earnings season is very much in full swing. So let's get into it. You can see it's reflected first off by the fact that it cost you 371,000 contracts to break into the top 10 today. We haven't seen that in ages. I can't remember the last time we saw it that robust. Recently, it seems like that's been like the number 3 spot is 371,000. So it's refreshing to see that much single name paper going up today. That gets you to the artist formerly known as Alphabet, or formerly known as Google, now known as Alphabet. Again, 371,000 contracts. Alphabet off about 1 3/4 points right now, or nearly 2%, trading right around 93.20. Number 9, Shopify, 391,000 contracts. I haven't seen them in the top 10 in quite some time. They're up 5 1/4 today, or 34 to 34.33, about 18%. I got a feeling we'll be coming back to them, so stay tuned for that. Number 8, our old friend Ford, 13 about 1/4, up about 40 cents. Looks like the market liked their numbers out there. They were trading as low as 12.46 not too long ago today, so they have rallied. Nice little pop out there for Ford, and they're up a couple of bucks from where they were not too long ago, and good for 405,000 contracts. So these are the kind of numbers we used to see from Ford a year ago, and everybody was piling into the 25s and the 30s. Remember that, listeners? It doesn't seem like that was that long ago. But how things have changed. Number 7, we've got good old Softy. Let's see where our friend Mr. Softy is hanging out today. 409,000 contracts for Microsoft, trading 227.10 right now, off about 4 1/4. Not quite 2%, about 1.8% to the dark side out there. And then number 6, we've got Twitter. So if you can't wait for the other Musk-related T name, I present to you Twitter at number 6, 431,000 contracts. Twitter actually up 60 cents right now, trading a little bit shy of $54 on the day. And now we get back to the chip zone. Interestingly enough, the chip zone has a sole occupant today. How long has it been, listeners? It's been NVIDIA and it's been AMD just hanging out, in that somewhere in the 4 to 6 range. Today, it is NVIDIA at number 5 with 460,000 contracts on the tape, up about almost $4.50, or nearly 3.5%, trading about 133 1/3 right now. It's rallied. It's at a $7 range. It's got a low of 131 and about 1/4, and a high of about 138, almost 40. So it's an impressive move out here for NVIDIA out there today, listeners. And again, good for 460,000. Then we jump up quite a bit again from 5 to 4, listeners. We got the Amazonians back in. Number 4, 899,000 contracts. They're off $4 right now, or about 3.5%. On the day, they've got as low as 110.5. They're trading a 111.65 right now. So they came for them a little bit. They have earnings today after the bell. They're just getting sucked down, it sounds like, by the disappointing earnings from other big tech names. Number 3, Uncle Mike used to love these folks. Now, not so much. He's waiting for the innovation index to turn. This is the fruit company, 987,000 contracts. We haven't seen Apple back threatening that 1M level in quite some time, but it makes sense. They're about to announce their numbers. Apple off almost 4.25 right now, nearly 3% on the day, trading right around 145. I've said it before, I'll say it again. The market does not like when Apple is red. It just unsettles everyone. So everyone clearly unsettled today. It was like it sold off from about 148 down to about 145.86, and then it rallied again back up to 148 this morning before selling off again back to about 145 and change where it is right now. So they tried to rally this thing, and alas, no dice there. Number two, yes, I said number two. I can't remember the last time this thing was not number one. This is Tesla, 1.38 million, actually up about $1.20 today, or about 0.5%, trading a little bit shy of 226 out there today. It's had a range of 233.81 on the upside and 222.85 on the downside. My goodness, quite the range out there in Tesla today. Good for almost 1.4 million contracts, 1.38 million contracts. But you can probably guess the big winner, at least from a volume perspective, kind of a big loser from a market perspective. The Rock Lobster talked about them earlier. This is the artist formerly known as Facebook, now Meta Platforms, 1.72 million contracts. Yeah, Facebook kind of screwing the pooch out there today, trading pretty much exactly $100 right now. They flirted with breaking through it. They got a little bit below it today, down to 97.36, back up to about 100 and change right now. Still off nearly 30 handles, or about 23% on the day. My goodness, they have come for Meta. You know, it's kind of been a 1-2-3 punch for Meta for quite some time. First off, Apple kind of cut the legs out from under them with the not tracking on their software. And then, of course, they've been just hemorrhaging money in this Meta. And now they have this new thing, $1,500. Doesn't seem like anybody's going to want to buy it. And they continue to pump money into this, what they think is the future. I think the head of Xbox today slamming it, saying this is nonsense. What are they doing? So a lot of people who are in the gaming and virtual reality side think it's kind of nonsense. But have you checked it out? Have you checked out the new? We have the Oculus Quest around here somewhere. I haven't messed around with that. I haven't seen the new one yet. But are you down with the metaverse, listeners? Seems like the market is not today. $100 for Facebook, listener. Let's see the last time Facebook even flirted with these levels. You got to go back. If you go back to March of 2020, listeners, and this is obviously adjusted for everything out there. March of 2020, the low was 149.73. So we are 50 handles almost below that March of 2020 low. You got to go all the way back to December of 2018, and even still, it was 125. You got to go back a ways to get this level again in faith. Looks like you got to go all the way back to January of 2016. That's the last time it had a 97 handle in Meta/Facebook. My goodness, they have come for this. And we talked not too long ago on Oddities or on Oddblock about, I think it was the Nove 200 someone got run over on. Well, now you can probably say the same thing about the 100s. If you've been trading actively out there in Meta, listeners, hit us up, let us know. This one's leaving a mark out there today. We still have some names popping off later today and during the day today as well. We got, of course, Mickey D's. Do they mean this about the no more McRib, or are they just teasing people? I don't know. After they took away all-day breakfast, you can't put anything past those animals anymore. Caterpillar, Southwest Airlines today, MasterCard, Apple, Amazon, Intel, and T-Mobile. And Friday we have ExxonMobil, Chevron, and a few others. Let's get some hot off the presses reports from our friends over there at Orats. By the way, we had Matt on the advisors option earlier this week. That should be hitting the network anytime now, so keep an eye on the on-demand for you. And he'll be joining us again on Volviews tomorrow to break down all this crazy earnings madness out here, because we are in it, listeners. So he's the guy who crunches all the numbers for us. We'll have some fun insights, so stay tuned for that. Volatility views coming up tomorrow. But today, Meta, hot off the presses, right before showtime, we ran these numbers, listeners. It was at 129.82 going into its announcement. It was at 101 and about 3/4 when we ran these reports last. So, of course, obviously, it's dropped since then. So they were pricing in 12%. They delivered about 22% to the dark side, listeners. And if you look at all their move today, they're off about 23% now. Shopify, again, they were at 29.06 going into their announcement. They were pricing in about 11%. They delivered 18.1%. And again, we'll be coming back to them in a little bit. We had Southwest Airlines before the bell today as well. 34 and about a third is where they were trading going into their announcement. They're pricing in 4.1%. They delivered 3.3%. So a little bit less juice, actually, out here in Southwest, which is kind of intriguing. Our friends Ford They were yesterday after the bell. 1282 is where they were going into their announcement. They were pricing in 6%, listeners. They had some juice in 4. They delivered 0.9%. My goodness, that's a heck of a lot of underperformance. So maybe that'll impact our earnings poll we have going on in a little bit. We'll get to that a little bit later on the mail block, listeners. Let's look at a couple of others here really quickly. We got Apple after the bell today. They were at 149 and about a third when we ran these numbers. They were pricing in nearly $7, $6.92 for that at the money straddle. In the past, they've moved 5 1/4. So you got a fair amount of extra juice out there, close to $1.70 in extra juice. Is it merited? Well, given all this action out there today, listeners, it's kind of hard to argue that it isn't. Amazon after the bell today as well. 115.66 is where they were when we ran this report. They're pricing in $8.71. In the past, they've moved $7.23. So extra juice. Is it merited? Only one way to find out, listeners. We have many more for you folks to sink your teeth into. In terms of the season, so far it's looking like quite the banger of a season. Week 1, kind of at 106%. So outperformance, which is nice, but not a ton. Week 2, I mean, we had 87 firms in that one, but 208%. That's crazy, Tom. I'll have to check with Matt on that one tomorrow when we rerun those numbers to see, because that's might be the most aggressive week we've ever seen. But then again, it's only 87 names, so read into that with a little bit of great assault. And so far this week, with 85 names reporting, we have 123%. Either way, it's all green. The season hanging out at a banger of 150% so far. I don't think that's sustainable, but we shall see. And we'll see what you folks think in a little bit when we get to your votes in our question of the week. And in terms of earnings trades, man, we got a freaking boatload for you, the technical term out there. Do you want some long straddles in Avantor Inc.? Well, we got you covered here. We got 2 of them going up out there today. We've also got, looks like all straddles today, buying a ton of straddles out here in Next Era Energy Inc. We've also got some straddles going up here in Cohu, C-O-H-U, and everyone's favorite name, obviously a newcomer here to the odd block, certainly. And we've even got Gilpy, a.k.a. Gaming and Leisure Properties, Inc., another long straddle. We got 1, 2, 3, 4, 5 long straddles going up. If you want the data on all that, listeners, one's May of next year, one is November of right now, one is February of next year, all over the place. Jan, check it out for yourselves. That's on our earnings trades reports, listeners. A lot of data for you folks to sink your teeth into. And because we like you folks, it's all free, as it's time for us to keep on rolling into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's keep on rolling. Let's get on into the weirdness, the wildness, the whimsicalness. I said we're going to come back to this name, and I never lie, listeners. This is Shopify Inc. Ticker symbol SHOP, S-H-O-P. You know this one, a Canadian e-commerce name out there. Trading 34 and about $0.50 right now. Like I said before, a nice pop for them today, up about 5 1/4, nearly 18%. On the year, a bit of a different story, as a lot of our names are. A year ago, it was trading 136.11, so over 100 handles above where it is right now. And it got up to its high for the year of 176 and about $0.25. That was in mid-November. And ever since then, it has been pretty much straight down. The low for the year looks like it came back in early October of 23.63. So from that perspective, they're up a little over 10 handles, about 1080 or so. So that's not bad out there if you just want to look in the last month or so. Nice little run for them. But Mr. Rock Lobster, looks like it wasn't a great run for our first victim out here. What first caught our eye, Mr. Rock Lobster, was 25,000 of the Jan 25 calls going up for $10.63. Paper buying these. It's an 85 vol. And we thought, well, that's kind of weird. Let's go see if there's something else with it. And there was something else with it. There was another 25,000 lot of the NOV 25 calls going up for $9.18. So it's like they bought this spread, pretty much did the roll for about $1.45 out here, 25,000 times. So we thought, you know what? Let's go see when they put those NOV 25 calls on to see how they did on these. I could probably guess maybe not great, but we wanted to know for certain. So our Eye of Sauron went back and looked, and sure enough, they opened these NOV calls back in July, on July 27th. So they've had them on for quite a while. And they paid $11.30 for these things, 25,000 times. It was about an 87 vol at the time. Interestingly enough, Mr. Rock Lobster, the stock, when they did both trades, almost literally unched. It was 33.91 back in July and 33.88 when they did this roll this morning. So effectively, the stock is unched. So even if they did sell some stock against these calls, they got nothing on it. Now, we could be charitable and assume they did some high-level scalping, but I think you and I both know that's probably not the case. So they did it tied to stock to begin with, and the stock is unched, and then they lost not quite, let's see. Actually, they did lose about $2, about $2.12 on these calls. So you're talking 25,000 lot. That's over $5 million. It's about $5.3 million they've dropped on the premium. Now they're deciding, you know what? We're going to keep this partay going a little bit longer. Going to go out to, again, this is a deep in the money strike too, which is interesting. The stock almost $9 above it when they did this. They kept it to the 25 strike, which is also interesting. So, Mr. Rock Lobster, they're keeping the party alive. They've taken it on the chin to the tune of a little bit over $5 million, but now they're swinging for the fences again with 25,000 more of the Jan 25s. What say you, sir? Are they throwing good money after bad, or are they crazy like a fox?
Yeah, we saw this one I think, you know, they're it's weird. This is one where was, okay, I know Shopify did a 10-for-1 split. And what is the pre-Shopify split price? Like $1,500 or something?
Probably, yes.
It's substantially higher than it is. So, I mean, if you look at it right now, yeah. So Shopify is trading $30, and I think, you know, a split adjusted to be $150 is the top. I don't know if they got the memo on what the value of Shopify is going to be. You know, it had some earnings growth, but like everything post COVID, I think the growth for all these online companies really slowed down quite a bit. I mean, you know, when a stock goes from basically $160 to $25, right? Like it's going to take a good long time to get back, to get some of that momentum back again. So, you know, I think they're looking for a bit of a Santa Claus rally, and I don't blame them. And maybe Shopify can, you know, regain some of the value that it got before. You know, it was trading at basically an insane multiple, value multiple, I believe. So I think right now it's probably 5-6 times sales or 7 times sales, which is still a pretty hefty multiple, although the market cap is only $36 billion now. You know, and the market cap was roughly $150 billion at the peak, which was, you know, I don't know what people were thinking, but anyway, I don't think there was little thought when all the money was free last year. But with all the free money gone now, things kind of go back to, you know, kind of finding a value. So, you know, the stock is back to, let's see here. It is back to a level, like I used 2020 as kind of the level here. And yeah, it's like, okay, it's solidly now below, right? The price it was pre-pandemic, you know, and it was got to about 50% of its pre-pandemic high. Probably a decent spot now for this company. Market cap is not insane. $30 billion is not nothing, but it's not crazy like it was before. So, you know, I think this is a reasonable trade. Like the stock going back to 40, something like that, they can make some money. So I'm not an unreasonable roll, but they do want to buy some more time. And while there's still value in their NOV calls, I figure they just want they want to take the value they can get and now give another shot out till January. So it's just one of those things where you're running out of time, and you'd rather have a little more time than less when you own calls.
More time, always better than less when it comes to owning premium, because otherwise you may miss the move. In this case, the stock unched $10 in the money, an interesting strike selection, but intriguing. We'll keep an eye on that. They've already gotten run over in this trade a little bit, but they're back in, doubling down, listeners. We'll see how this fares. Speaking of names we're coming back to, we have talked about Revolve Group in the past, ticker symbol RVLV, trading right around $24.50 out there today. Actually up about $0.75, about 3.25% today. So a nice little day for them. On the year, different story. They were trading nearly $70 a year ago, and they got up to their high for the year, $89.60. That was back in November, and they have just gotten annihilated ever since. The last month, a bit of a different story. They have rallied from their low of the year of about $20.61 back just a couple of weeks ago. They're now trading, like I said, $24.46. So they're up close to $4, about $3.70 just in the last couple of weeks. So a nice little near-term rally for Revolve. But you know what, Mr. Rock Lobster? We've talked before about people. In fact, we have one waiting to pay off, I believe, from some August puts in Revolve Group on Options Oddities. Someone coming back again. Someone's been fading this name for a while, or at the very least concerned about its near-term prospects, because they're coming back in and buying more puts today. In particular, the NOV 22 half puts going up 8,000 times this morning for $1.48. That is that's a 114 vol, listener. So that is pretty juicy. They pretty much lifted the offer. And let's see, the stock was 25.25 when these went up. So the stock was almost 70 cents higher. So that passes the first Rock Lobster test. The stock has moved in their direction. I guess they liked it because they came in and did about 1,500 more. Total of 9,500 have traded on the day now. There are earnings in this cycle as well. The earnings are on the 2nd after the bell, so just in about a week out here. So we'll probably have an answer pretty soon, listeners, as to whether these NOV 22 half puts are going to be looking good or not. Mr. Rock Lobster, looks like somebody coming back once again and fading Revolve with some puts, and this time, at least so far today, it's working out.
Yeah, Mark and I looked at these today as well, like really bearish. I mean, there's not much you can say about these puts, except for someone thinks the stock is going to go down a lot, or they're protecting a gain and, buying an aggressive put at the money. Maybe they bought the stock, quite a bit cheaper, but I don't think it's been a whole lot lower than it is right now this year, to be quite honest. And actually, I don't get, this is one that Mark's wife, she kind of knows what's going on, and this company does fairly well. So I think if the earnings are really poor, this would be a surprise and a possible real real turnabout as far as sentiment goes for the company. So this was a fun stock for me to trade, but I'm totally out of it. And I was wondering if it get back to the teens again, because I think it would be a great purchase down there. But apparently Mr. 22.5 or Miss 22.5 put buyer is, they're looking for sub 20. There's no way around it. So it's on my list. It's on my watch list always. I was just waiting to see if it got to an interesting price again. But you can't get any more bearish than buying these puts.
Like the one we were profiling on Oddities, we were keeping an eye on, was some AUG 25 puts. They bought those back in July. Those paid off as well. So somebody has been fading this name for a while, and it's been working out. So if past is prologue, sir, then they shall perhaps be laughing all the way to the bank again on these. We shall see as we go into our final name. This is a newcomer to the Odd Block listeners. This is Host Hotels and Resorts, ticker symbol HST. Trading $18.50 right now, up about nearly $0.50 or a little over 2% today. On the year, this one, unlike all the rest of our names, it's kind of been all over the place. A year ago, it was trading $16.74, so it is actually up on the year, unlike most of our other names. And then it kind of sold off to $15.36, and then back up to nearly $18 again in January. Then it got up to $19.30 in February before selling off again down to $16.50. Then it rallied to its high for the year in April of 2163. Hung out there for a while, and then on June 7th, not quite June 8th, actually June 8th it happened too, so it was both days. Started selling off on June 7th, but on June 8th it went from $20.94, listeners, and by June 23rd it was trading $15.40, so it kind of fell out of bed there. Hung out there for a little bit, then rallied right back up to almost $20 again, $19.50 in August. This is a very volatile hotel name, and then right back down here to $15.50 in September. And then that was the low was $15.10. Looks like it came sometime in that time frame, and then it has rallied since back to $18.50 right now. This chart, if you just showed me this chart, I would say this was a cheapy little biotech or something, but it is a hotel name. So let's see what we got going on out here, Mr. Rock Lobster. This is something you don't see every day. Size bullish risk reversal, and doing it kind of as almost a diagonal, a time risk reversal. Looks like we have 6,500 of the Nova 18 puts going up. Paper selling those on the bid for 50 cents. It's about a 43 vol. And against that, they were also buying not the Nova, but the December 20 calls for 56 cents. So they did the whole thing for a 6-cent debit, listeners. And then they liked it so much, they did it twice. They came back in and did another 6,500 a little bit later for about the same level. So a total of 13,000 of these bullish risk reversals went up today, Mr. Rock Lobster. So this is interesting for a couple of reasons. First off, again, it's just a size bullish risk reversal. You don't really see those too often. B, they split it. So they sold the puts in November and they bought the calls a little bit farther out. I don't mind doing it that way, taking advantage of some of the theta. It's kind of interesting, but it makes it more of a time spread than just a straight up single month bullish risk reversal. So if you have thoughts on that as well. And then C, what are your thoughts overall on this approach to a very volatile hotel name, Host Hotels, sir?
I think this might be the holding company for Marriott. I'm not sure, or Marriott put all of their, anyway, all I know is that the chairman of this company is named Marriott, Richard E. Marriott. Could it be the same guy?
Just a coincidence. There's a legion of Marriotts floating around them.
Yes. This company manages a portfolio of a mere 53,000 rooms. So it's a small enterprise, very small enterprise. I just assuming they're sitting on a ton of real estate. Host. I'm not, again, I don't know all the details of this company. I thought this could be like, does somebody want to buy it? I mean, with a company like this, 21 is kind of the peak price. So I can see why they're doing the risk reversal for even money and seeing if, it gets a little lift out of here to, to above 20 or something like that. So I don't think it's a bad trade. The downside looks reasonable. I don't think this is a bad trade at all. As far as kind of like, you're looking for like a little leveraged bullish play, and, about 16 is the low for the stock. So I think it's a reasonable trade. It's a reasonable but leveraged upside trade.
This is the world's largest lodging REIT. That's what they are.
There you go.
So
that's big.
People have been fading REITs all year, right? There's tons of REIT puts we've been talking about. This is one of the first bullish plays on a REIT we've seen in a while. So intriguing stuff, listeners. Read into it what you will. You like this methodology? I don't mind them doing it this way as well, splitting it between DC and November. They get those calls for only 6 cents, so they're getting a little bit more time. Obviously, the goal is to get that upside, and they're getting it for an extra month for only 6 cents. So not bad. Interesting stuff as we keep on rolling. See what you folks have in store for us. Time for a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. We touched on earnings earlier. That is also the subject of our question of the week. We said since the start of the pandemic, each earnings season has only delivered about 85% of the movement that was priced into their straddles at the start of the season. What is your outlook for this earnings season? You think it's going to be somewhere about the same, 85 to 90%? Think it's going to be a bit of a banger, north of 100%? Or is it going to be pretty boring, below 80%, even though we had our buddy, Mr. Passarelli, point out yesterday on Options Bootcamp that below 80 could also be exciting in its own way. So I suppose if you're selling a lot of premium, below 80% is just what the doctor ordered for you. But Uncle Mike Let's get your updated thoughts on this one, sir. First off, what is your vote? And then where do you think our audience is voting, sir?
Well, I think that with where we are, let's say it's below 80. We'll go below 80 for both. Why not?
You're fading the excitement. You're saying no action at all this cycle. Just complete snooze fest. Interesting. Mr. Rock Lobster, same question for you, sir. What is your vote? Where do you think our audience is voting?
Yeah, I'm gonna say I think just the earnings are gonna be met because the whole growth picture and all that kind of stuff is met. So I'm gonna go on to I'm gonna say pretty boring. My outlook is boring, although Facebook obviously down, or I can't call it meta.
Facebook says hold my beer.
That was exciting, but I have totally washed my hands of that stock last year. Was quite happy to do it.
Well done, sir.
And I feel like they got what's coming to them. Yeah,
they got quite the drubbing out there. Let's see what our audience is down for. They're saying boring, they're saying action-packed, or about the same. And it looks like 41.2% right now saying about the same, listeners. They don't expect much of a change this cycle. Then we have a weirdly specific tie for second place between north of 100%, so action-packed, and below 80%, so pretty boring. Both of them at 29.4%. That's weird. So get in there. At Options is the place to go on Twitter. Make your voice heard, listeners. Just like our friend here did, JSP. He's got a question for you, Uncle Mike. JSP wants to know, does Uncle Mike ever utilize stock substitution strategies? If so, when? So, Uncle Mike, when do you get down with the old stock substitution, sir?
All the time. Now, what I'll do, the traditional stock substitution is a diagonal spread to where you buy a call option 6-8 months out, and then you're selling near-term calls against it. And the concept is that you can have similar upside to the stock if you manage your short call very well. I'm not in that right now, but there's other methods with which I'll use. I refer to it as my simulated index concept. And the concept is that you take a good amount of your money you would normally put into a stock, put into something boring, and then just buy some calls on it, or perhaps sell some put spreads, or do a diagonal spread, or do something levered to do so. I do that all the time, and it's a pretty big part of what I do, quite honestly.
There you go, listeners. So who was that? JSP doesn't just like it, he loves it. And it's a huge part of what he does as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until we can gather here together on the next episode on Monday. Let's go out to the rockingest of lobsters. Mr. Rock Lobster, sir, what are you keeping an eye on until our next episode?
Well, we do have the fruit company earnings. We have Amazon earnings. We have Intel earnings. And then I guess Monday next episode. And then Wednesday we have the second. We are in the Fedland. So we'll just see what happens after that. I think that's going to set the tone, I believe, for till the end of the year. So good, bad, or ugly. Don't know which.
Uncle Mike, good, bad, or ugly. What is your choice? And then what are you keeping an eye on to our next episode?
Well, you always got to go with good. I wouldn't want to be bad or ugly. Who'd want to be such a mean thing? You're mean-mouthing it. Don't want to do that. So I think that I agree with Andrew in that I'm definitely watching Apple earnings, and Amazon will be, and Intel will be a big part of this as well. So seeing that, and then ultimately just watching the news for, yes, we have the Fed meeting coming up, but I think the reaction and any surprises that may or may not happen is what I'm also watching for.
All right, listeners, that music means we are done, at least with this episode. But if you need more living in your ear holes, need some more content, don't worry. We got you covered. We'll be back in about exactly half an hour for all of our pro folks live with Twifo. I'll be joined by Martin Franchi. He is the CEO of Ninja Trader Group. They got some cool new contracts coming on the futures options side. They got event contracts coming. So that's going to be kind of interesting. We're going to dive into that a little bit on TWIFO in about exactly half an hour. But before we go, let's go back around the horn. Let's start with the Uncle List of Mike. Mr. Uncle Mike, sir, if folks want to reach out to you, they want to see what you're cooking, where should they go? What should they do?
Follow me on Twitter at Mike TOSAW, TOSAW. I try to put out content as often as I can. And if you're looking for a financial advisor and want to have a conversation with such things, go to my website, stcharleswealth.com, and set up an appointment with me. Would love to have a conversation.
Mr. Rock Lobster, same question for you, sir. Where should folks go if they want to learn more about all things pit?
All things pit, go to optionpit.com. Ask about my Spy Master program where you trade SPY versus VIX as a pair. It's pretty cool. It's doing pretty well. So go ask for Ted or other Andrew, 888-trade-01. And like you hear it on the show, you get 10% off anything we sell at Option Pit. Something for nothing right there, which is more than I'm getting for my premium box. I ain't got no premium box.
I knew. I was waiting. They got made a whole show without any umbrage, but right at the end, he had to twist the knife there.
Slide it in the last 30 seconds.
Just waiting to get his umbrage, and he's just mad because Uncle Mike says he can't play for the sweet, sweet Sergeant Slaughter. Maybe he'll get his umbrage box. Nonetheless, it's going to do it for us here on the show this week, listeners. Like I said, back in a little bit for TWIFO, listening live. You can get it in your ear holes pretty much right away. If you're on demand, it'll be hitting the network later today. Just hit next on your device of choice. Back again tomorrow, noon Central, 1 p.m. Eastern, to break down all the madness and volatility on Volatility News. Then after that, for some more umbrage with the Rock Lobster on Options Oddities. Then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.